The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful Money Masters and Treasure Hunters. Welcome to the April 18th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and folks, I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what each of us must master each and every day. So let's go take a look at one of our empowering thoughts, or what I believe is an empowering thought, and that's this, folks. We must know that in any moment, I mean any moment, a decision that we make can change the course of our life forever. The very next person you stand behind in line. Maybe it's the next person you sit next to on an airplane. How about the very next phone call you make? Maybe it's the one you're going to receive. Maybe it's the very next movie you see. How about a book that you read or a page that you could turn? Folks, that could be the one single thing that causes the floodgates to open, and then all of the things that you've been waiting for, all those things that you've been planning for, will fall into place. What an empowering thought. Let's go take a look at the empowerment of the markets here. It's all red out there right now. The Dow is down 82 points, trading out at 14,537. The S&P off 10 points, trade at 1541. The selling continues. The composite down 30 points off 1 full percent, almost 1 full percent here right now. The Russell 2000 down 0.6% off 580. Google off $9. Apple down 6. Microsoft off 25 ticks. Intel off 3. Cisco up 4 pennies. Popping to the upside here. You've got Core Laboratories, $8.31 to the upside. That's up about 7%. PPG Industries out with earnings. They're up almost 6%, $7 and change. Union Pacific up 4.40. Theravance up 4.25. PepsiCo up $4. Rand Gold. We're going to take a look at some of these gold equities. Rand Gold Resources up 3.35. Travel Zoo. TZoo is the ticker symbol. They're up 13% this morning, up $3. Overstock.com. Apparently, they're not overstocked. They're up $2.79, up 24% in the market. Priceline.com, that's another side of the story. They are down $14. Google off 8. You've got Amazon down $6. Apple down 6. Green Hill and Company off 5. Biogen, Bib, usually not down. It's down $4. Only 2% to the downside. Humana off 3.38. You've got eBay. eBay is off 3.25. That's off 6% out there. Regeneron Pharmaceuticals off only about 1.5%. Our call number is 877-927-6648. Let's start off the day by taking a look at our indexes, see what we've got going on here. The S&P 500, it wants to take on that hammer candle out here from the trading session of April the 5th. That low is 1539.50. It breaks that level, and when I mean break, not test it, I mean simply close below it. A close below 1539.50 at the end of the day. That says look out below, because you don't see support inside the S&P 500 until you get down to these February lows here, February 25th specific, or February 26th specifically. That price point is 1485. I did this as we went into the close of the last hour. I'll do this again here. Another benchmark that you're going to use is the September 14th date. We watched the DAX earlier. The DAX is down to its September date. It happens to be the 21st versus the 14th. The September 14th date here, if you're watching us on Tiger TV, the high is 1474.51. So 1474.51, that is at least where I would expect that we will see the S&P 500 move to if we get a crack of that hammer. Well, it's going to head there anyways. But if we get a crack of that hammer candle, the floodgates, I was talking about floodgates earlier. Well, the floodgates will open, because there's no support until you get down into that February 26th level. So you're looking at 1485 to 1474. And then really what you also do here, I'll put those lines on the chart. We'll just take a look at normal Fibonacci retracement. I mean normal, which is the low of November 16th all the way up to the high that was put in on April 11th. The 382 level is 1500. So moving to that range, 1500, that is just that's a normal movement. out there, not even what you would consider to be a correction in the marketplace. Certainly a correction from what the bulls have expected here, where all of the dips have been bought. That certainly is not the case. In fact, what we're seeing bears overrun bulls now, because we have volume each day that it's moving down. We have volume to the downside. Of course, we only had one day of a bounce here this week. That was on Tuesday. That was light volume, but that was enough of a signature to say, look out below. Now it's that hammer candle low. Again, that number is 1539.50, and that will say the floodgates are open. That's on the S&P 500. Let's go take a look at the other indexes here. How about the New York Stock Exchange? The NYSE, you see the NYSE made that three drive to a top pattern on April the 11th, a very bearish pattern. This is a more bearish pattern, more of a longer-term bearish pattern than a butterfly, than a Gartley pattern out here. So when it comes to those types of expansions, these tend to be the most bullish and or the most bearish out here, and that's what we've had inside the New York Stock Exchange, a larger breadth of the marketplace. I read a few articles over the last couple days, some folks out there trying to do the Hindenburg calculations, thinking that we might have seen that reversal out there. I think it was close, but no cigar out there. I still would need to go do some work. It doesn't really matter. I don't even really have to spend time doing the work. I know that on the New York Stock Exchange, we've got a three drive to a top pattern, and we've got volume off of the top. That's enough for me to know when you take a look at any stock chart that is not a good positive sign. By the way, the retracement down to 1,500, that's just a normal dead cat bounce. So we'll see what the market here wants to do. Excuse me. Let's go take a look at the other indexes here. Let's look at which one do we want to look at? How about the composite? Let's look at the composite here, often overlooked. The composite had also formed a butterfly pattern now. The composite formed a 1.272 butterfly pattern. That was coming off the swing point of September 21st. Remember the DAX? I mentioned that not in this show, but the DAX formed its swing point high on September 21st. The S&P did it on the 14th. In the case of the composite, excuse me, I needed a little sip of water there. The high on the composite on the 14th was 31.9567. The high on September 21st, 31.96. So that's a swing point that we would use. If you go from that high, 31.9693, all the way to the low, on November 16th, you'll see a 1.272 expansion of those swing points, takes you up to April the 10th. So you get up to April 10th, you then have volume off of the high here on April the 15th. That pattern says a normal retracement of that pattern on the composite, just to give you an idea. Well, the dead cat bounce is down at the 0.382. That's 31.17. These patterns, these butterflies, these expansion patterns here, typically you'll see a move down to sweet 618. That is likely where it's headed. That takes you into the 3,000 level. That happens to be the December 31st swing point. That's where the breakout was. That's where you must suspect that the NASDAQ is going to pull back to. The NASDAQ here, you also see the blue lines on my chart here, the rising price channel. That price had been in. It's broken that level, and it's broken it with conviction. And it broke that level here on the 15th. And where's my, how about that? Let me do this here. I lost my big crosshair. That's not necessarily a good sign. Ooh. It's even a worse sign when your system freezes. Give me a second here while I do this again. Okay. Let me sorry about that. That could make for an interesting 4 minutes or so, but looks like we're back up and running here. So apparently what happened is let me try to get back to those tabs here. My apologies. Nothing like live radio and a little technology to throw you astray, but nothing can knock me off of my game. Let's go back to the daily indexes here. Let's take a look at the composite again. So we're taking a look at this rising price channel that the DAX had been in. Now I'm using co-located. That means either opens or closes of the. So I'm looking at the bodies of the candle and trying to identify the largest number of opens and closes. So I think these price channels here are set pretty well. In fact, what's interesting, the price channel was drawn well before we saw the market move lower on April the 15th. Man, this is weird. On April the 15th here, you get volume off of the top. And what happens when you break a price channel? Price tries to get back inside it. And that's actually exactly what took place if you were looking at the chart here on our screen. If you're following along on Tiger TV, maybe you're listening in on the radio or your mobile device at tfnn.mobi. Let me describe to you what you're looking at. And what we're looking at is a price channel that starts using the bottom of the open on November 16th. That price on the open was $28.38.90. The next touch point that I use is the close on December the 28th. That happens to run into the open on February the 26th. And that price level there on the open was $31.26. What you'll see is a break of that price channel, of that line. We're paying attention to the downside here. When you break a area of support or resistance, the market often will try to get back inside there. That is exactly what happened on Tuesday. Look at how beautiful that worked out as the composite closed at its highs, which were 32.65-ish. It closed at 32.64.63, and then rejected price again, and you had a gap down. That's a very bearish candle right here. This is a bear separating line. And this is of candle formations. When I take a look at 2-day reversal candle formations, I like to classify things just to understand the order of strength. And the order of strength here on 2-day candle formations, really there's 5 of them that you really want to be paying attention to. On a level of 1 to 5, 5 being the strongest, this is the strongest. And what is a bear separating line? I am glad you asked me that question. Let me tell you what it is. Take a look at this candle here on the Tuesday's session here. Opens, it gaps up. It actually gapped up a little bit. When I say gapped up, I'm just talking about compared to the close of the prior session. That's not so important. But take a look at where it opens. The price point open is 32.39, moves up into that trend line and rejects that. The very next session, this is where it gets bearish, it opens at or below the open of the prior session. So there's a version of a gap. It's not one where you see some unfulfilled price, but getting all that is a very bearish candle out there. So on top of having the 1.272 butterfly, on top of having volume off the top, on top of going and trying to test that price channel, you kind of get the idea. It's not me. I'm just reading the charts. And reading the message of the markets by taking a look at the candles and doing this on a day-to-day basis. And you put all that together, that says the 3,000 level is what is game for the composite. Well, if that's what's game for the composite, then you can imagine that maybe Apple's not done running to the 395 level out here. But you still got to trade each chart one thing at a time. Whatever the chart is telling you, just stay with the chart and trade what it is that you see. If we go take a look at the transports here, the transports not doing too bad this morning. That still says, okay, this market wants to bounce today. The transports here, the key is going to be this hammer candle from April the 5th out here. That hammer candle low is 58.78.12. If that breaks, it's got just a slight bit of support underneath it at February 26th, but that would say, I doubt that would hold. I think the power of breaking that hammer would be in place. If we take a look at retracements inside the transports here, again coming off of the November 16th low all the way up to the high put in here on March the 18th. Says 57.35, that's your dead cat area, but 53.92. Of course, that takes you back into January 2nd. 877-927-6648. We've got the Dow down 75, S&P's off 9. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 62 points right now. S&P's down 8. And let's continue on taking a look at the indexes. We're going to go ahead and rip apart the Russell 2000. Now, this is where we're going to put together a couple of different charts here. It's helpful to understand what's going on inside the future. In my opinion, it's helpful to understand what's going on inside the futures market, as well as the indexes, as well as the ETF structure. Now, we're going to start off with taking a look at the daily chart of the Russell 2000 and what it has formed, what it did form, I should say, back on April the 5th out there. Nice hammer candle. And as you know, when you break a hammer candle, if you're long, you're wrong out here. The hammer candle was broken. It was broken on Monday's session, April 15th. Price moving right down into another bullish candle configuration, which was just below it. So when you're long, you're wrong. What I always mean by that is that you then need to look for the next area of support. That's where price will travel to. That's, in fact, what happened here. Now, that should have been an area of support. That's exactly what price, in essence, did on April 15th by getting down into this morning star candle reversal pattern that you had on the futures contract, on the daily futures contract here. Now it looks like, and we had that break on Tuesday. Of course, that break was on light volume, that bounced, and then it gave it all up yesterday as well as today. Now, what it looks like we are taking a look at here this morning, we saw the Russell 2000 try to get back inside that old support level of that hammer candle. That low there is 907.20. Rejected that area. Still having difficulty busting out this area of support, which is on that Morningstar area back on February 26th. So that's the area that it is trying to take. It's now trying to take this hammer and turn it into a sledgehammer or a jackhammer as it tries to crack through that area. Once it cracks through that area, then what you're going to do is you're going to come back and we're going to take a look at the swing point here. Inside the Russell 2000 futures contract that takes you all the way back to the May 2nd, 2011 time frame. That high is 872, folks, even Steven out there. You get a close below 872, folks, and this is going to be more than just a little correction. This is going to be getting back in, especially if it comes back in with conviction. And that's where I've got support level 3 out there. So you just got to take things one thing at a time. Now, we're going to go from the reason I'll show you why we take a look at both the futures as well as the index. Now we switch over to the actual Russell 2000. On the Russell 2000, if we take a look at April the 5th out there, that's not a hammer candle at all. That is not a bullish candle by any stretch of the imagination on April the 5th. So you wouldn't have an understanding of when you break that area, in essence, what it means. It's why you want to be able to take a look at candle patterns. You want to put all of this together. It'll make things a bit easier for you. You also have the Russell 2000. All right, now moving down into this morning starish type candle as well, which is going to be support of February 26 out here. These blue lines on my screen, those are the primary trading ranges. That says right around the 880-ish mark is where the Russell 2000 wants to get down to. But if we come back, really what you're looking at here on that May date, so let me move this over here. I'll blow it up. The number you're looking at on the actual index here is going to be the May 2nd high, which is 868.57. So that's the magic number that you are watching for. If the Russell 2000 closes below that, it truly gets back into the bottom portion of the range here. That says that, and I don't know that it's going to do well. Look, we'll just take things one thing at a time here. But if it gets back below there, then what that sets up is a run to the swing point low all the way back to November the 16th. So that certainly is not unthinkable at all. And it looks like so. Those are the numbers there for the Russell. Now let's go take a look at the ETF. Let's look at the IWM. See what we have out here in the IWM. The IWM itself, you can also see on April the 5th. No bullish candle out here on April the 5th at all. So that's why again you're just trying to put together the futures contract, the index, and the ETF in order to be able to read a complete picture of what's going on in the market. We do have this Morningstar candle configuration back here on February the 26th out here. That low is $88.79. That has only 47 million shares there. The Russell 2000, when it had volume come out on Monday, was 100 million shares, and then it was bouncing up with 58 million. Oh, really? I know Tom always likes to say that. I don't think I've ever said that. And then on April the 17th, yesterday, down with 77 million shares. All that coming into an area of support that only has 47 million shares. So the sledgehammer is out, trying to break through that. And you take a look at the ETF structure here. If we go take a look at the IWM, go from the low of November 16th to the high on March the 15th. Your dead cat bounce, 87.77. It's really 88.32-ish where it wants to run to. That's right back down into December 31st, 2012. That price range anywhere from 82.35 to 84.43. Dow's off 51. S&P is down 7. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. The Dow off 35 points right now. S&P off 4, and we'll switch over to the 30-minute chart on the ES Mini. The Bulls are back in town. The Bulls have shown up for work. They formed a nice little hammer candle here on the 30-minute chart as we came into that 10:30 session. The market pushed lower down into on the futures contract down to 1535.50. If you're watching us on Tiger TV, you're taking a look at a couple of different patterns out here. I'm going to go ahead and get rid of the second pattern. This was a pattern that I drew in earlier. I drew it in yesterday. I was short the ES Mini. And I went ahead and closed out my position by 2 o'clock in the afternoon as we saw a little reversal taking place here. There's this piercing candle right here that came in at 1 o'clock. As you know, I believe the body of a candle is the essence of price here. In this case, you can always get a continuation pattern to the downside. Now, when you get a piercing pattern like this, it's a pretty good indication. You know, it's not a small-bodied candle. It was 75% of the way into the body of the candle session from 12:30. That was a pretty decent indication. that, okay, the market was going to get ready to bounce. I went ahead and took a long position inside the ES Mini, and my stop was at 1536, a close below 1536 on any 30-minute bar, very close to that taking place as we came into that 10:30 session. But the bulls ran in there and created that hammer candle. That says now support here on the 30-minute chart. Again, this is just intraday trading out here. But the cool thing about it is that the same technique that's used here on a 30-minute chart is applied to any time frame, weekly, monthly, quarterly, hourly, whatever time frame it is that you might trade on. Could be used on a 3-minute chart as well, although I don't recommend you do that. That you could go pretty wacko. In any event, you also had a piercing candle. That is a bullish candle configuration. Now, the reason I drew up this pattern here, I'll go through my thought process. That way, at least you can understand what I take a look at here. If we take a look at this pattern, the last time, so here we're going to take a look at Monday. The market moves down to a low at 5 p.m. in the evening, down at 1538.75, and then formed. So there was a bounce. Now that Monday session, we had a one-day VIX percentage increase of 43%. In the history of the VIX, that was the third highest reading out there. And if you go back, which I did, go back and listen to the archive shows on Tuesday, I believe it was. That I did, 9 o'clock and 10 o'clock hour. We went through many of those percentages because I keep track of that stuff and overlay it on the charts just to understand if there's a pattern out there. Because this is nothing more than trying to identify a pattern probability. That's all that these patterns really are. Now, if you use the candles, I think you can increase. I know you can increase your probability. So what did the market do? We were expecting it to bounce. The bounce was on light volume. That's what you wanted to see if you were taking more of a bearish position here. And all that it really did was it created this 0.786 Gartley buy pattern. If we take a look here at the move off of I'm using the swing point at 8:30 in the morning on April the 15th down to the low that was put in at 5 p.m. As the market made a move right up here into the 0.618 level, that was a 618 Gartley, but there was not an A to B equals CD that would have completed there as well. You didn't have any bears showing up for work inside the ES Mini at that stage. So it created a 0.786 retracement. If you take a look at then switching to a long position standpoint, only from this position. Look, folks. Take a look at the oversold condition that was out here as the ES Mini was making its lows back in the 5 o'clock time frame on Monday. Take a look at yesterday afternoon around 12:30 as the market was moving down, getting into that oversold territory. We said it's got to work its way off. It certainly did that coming into the 7:30 time frame out there. However, nothing really had changed from my viewpoint of this pattern here being able to fulfill itself, not until we came into the 10:30 time frame. But nonetheless, I was looking for another 0.786 retracement. Now, the beauty there was that we had this 2.618 Fibonacci number also that was out here. That was after the completion of an A to B equals CD up and the retracement. Nice Fibonacci numbers. To me, that was a strong area, should be a strong area of resistance, 1563. Now, because my point moved all the way down to the bottom of the hammer candle, this here can just simply be erased. It no longer exists. That's not an active pattern. As far as where this might bounce to, now I've got to change to the whole, the entire pattern that I would take a look at. It's first going to run into some agitation right here, turbulence at the most recent swing point at 8 o'clock. We'll see what the candles look like as it gets up into that 1550 area. After 3 days of high, wide price spread, we could see a narrow traded range today. In essence, that's almost what this is looking like it is setting up to do, a narrow trading range. But we'll see if it can break through. If the ES Mini can break through 1550 here, then it can go ahead. And I would say let's look at the retracement now off of that 0.786 swing point high at 4 p.m. on April 16th, now down to the hammer candle. It says the dead cat's 1549, so you're looking at 1557 to 1563. However, a break below this hammer, it's pretty simple. Close below 1535.50. That trade was wrong altogether. What I'd like to see now is a little bullish engulfing candle here to form by the 11 o'clock time frame. Let's go take a look here at some equities. Let's go take a look at It is earnings release, so we've got a lot of stuff going on here in the marketplace. I want to go back, and we're going to take first at United Health. If you didn't catch the first hour, let's put the daily chart on our screen here. United Health has created a huge island reversal pattern here. United Health had nice volume as this thing moved up on April the 2nd. Wide price spread, and what I mean by wide price spread here is if you take a look at if you take a look at where it closed the prior session, it closes the prior session on April 1st at 58.97. So what you've got, because you've got this gap here, what I want you to imagine in your mind, I want you to fill this in. If you go ahead and fill in this area here, you're taking a look at huge price spread. In fact, I don't know that we've had, let me just do it like this. I can draw it for you so that makes it a little bit even easier for you to take a look at. So here's the actual price spread of that candle formation. And if we go back and I try to find any other day that is like that out here, any single day as I come, any single day, we've got one day right back here. So one day where I see that same price spread, that is on the trading session of the June 28th. Now, what's interesting about that trading session, you had that wide price spread, and then it decided to go ahead and continue moving lower from there. Looks like it probably made a expansion off of a set of swing points here. Let's go see what that expansion was. A little bit over 1.272 expansion. But that's wide price spread. If you were just look at this candle like this and not use your imagination, and that's the only nation you can control is your imagination out there, then you might not have taken a look at that as wide price spread. Now, this also shows that the candle that was formed on April 2nd, is a shooting star, the opposite of that hammer candle that we were looking at on the ES Mini. That's a bearish candle, but when you really put the wide price spread together, when you fill it in here, the bearish, and you had the volume behind it, it starts to lose some of its bearish connotations. Well, it didn't lose any bearish connotations today. Now, the trading session is not over. So long as this does not trade up into 61.29, 61.29 is the low of the entire island that is out here. It is giving you a bearish reversal pattern, and that is inside United Health. Let's go take a look at out with earnings day. It's going to be, if it's not volatile during the day, it's going to be volatile after the close today. We've got, let me see, where did I put that chart out here? Where did I do all that work? Interesting. Google's really what it is that I'm looking for. It's probably under, I thought it was under earnings, and I don't see it there. Let me go under show charts. Maybe it's under show charts here. Show tunes. Give me a second here to try to pull up Google. Oh, my goodness. Let's see here. Where is it? It's got to be right in front of me. Let's see if this is the chart here. Google. There we go. There's the chart that we're taking a look at. So, knowing that Google, well, let me ask you this question. You think Google is very volatile when it comes out with earnings? Well, I think that it is. Let's go actually take a look at it. Last time we had Google out with, first, let's take a look at Google right now and see what it's doing. Google's trading at 773.22. It's trading down today, down by it's off $9, so a little over 1%. Volume-wise so far, we've been trading for a little over an hour. It is down with 644,000 shares. It's going into, it's going into this area here where it broke out on February the 1st. On February 1st date has 3.7 million shares. Also coming into the most recent swing point from April 8th with 2.8 million shares. Seems like it's got the volume there to take that out. Now let's take a look. Let's go back and take a look at earnings dates. I don't know if I'm going to really be able to do this on the air here. But we're going to go to Tom in Tampa in just a minute here. But if we take a look at Google, let's just take a look at the last several earnings reports. Here's January 22nd. Obviously, the way that the market interpreted the numbers was positive. It gaps up. So did you have to make a Google play ahead of time in order to have scalped some money here? The answer is, you know what? You didn't. How about that? Let's go take a look at the next time we had Google out with earnings. This was on October the 18th. On October the 18th, I think that earnings got released a tad early or something, as I recall, during that time period. We take a look at October the 18th. You've got market moving down. Did you have to actually have to sell Google, to sell Google beforehand to actually make money? I mean, the close on the 18th was 676. It traded lower. It traded all the way down into the 636 range. So the answer is, no, you didn't have to. Now, not the case here on July the 10th. July the 10th out with earnings. However, it did gap down. If you had taken a short side of the trade there, that certainly would not have worked out for you. So far, we've got 2 out of 3 that have worked. How about if we go back to April 12th, 2012, earnings release, the following trading session, market doesn't like it. What does Google eventually do? Moves down. Now, what you have to use is A to B equals CD pattern as far as where your targets are, your exits, and so forth. But are you kind of getting a picture here? I think Google actually offers us a fairly unique trading opportunity in that you don't have to try to figure this one out before it actually releases numbers out there. So I suggest that you go, just like I did, what you can do, go find all the earnings dates for Google, do the work yourself, and see if there's any high probability of a trade for you. Don't just take these 4 examples here, but I would say, something to think about. Speaking of something to think about, let's go think about the euro with our man Tom in Tampa. Tom, thanks for calling. Thanks for holding. How are you today?
Hey, good, Steve. How you doing?
I am doing excellent. Thanks so much for asking.
Good. Hey, Steve,
tell us
euro.
tell us what you're doing, what you're looking at.
It came down good. Yeah, what a beautiful thing yesterday. My baby came down. I covered my short last night. And it looks like this thing just keeps pounding back up into that 130.70 to 130.76 area. It's done it already 3 times today, and it goes back down. I'm just wondering, you think she wants to get out of here and head up to that 131.23 area? I think she's.
I do. You know, if you listened, if you listened on the show last night, Daryl Martin comes on at, I believe it's 20 past the hour. Or 30 past the hour during the first segment. I was doing the Tom show from 4 to 4:30, and Daryl does a show for us each day, 1 to 2. He is our Nadex expert, so I was trying to come up with a couple of Nadex trades for folks to go out there and take a look at. And one of the trades that I gave was taking a look at the euro, and I was just simply looking at the 30-minute chart. We saw the euro had moved into the oversold territory. And when it did that, it also gave me another signal to go ahead and take a long trade. That first target here that Daryl and I came up with was at 1.3076. That target here has been hit during this session right now. I do believe as I take a look at this here, the euro wants to move up to 131.23. As it's moved, that's nothing more than just a normal bounce, a 0.618 retracement out there. If we take a look at possible patterns that it could be creating at that price point, let's see if it's, I didn't do a very good job. That was even a lousier job there. Let me see if I can actually anchor this thing with my with this tool that I use to draw Gartley patterns. So let's see what we've got out here. Well, it looks to me, the answer to your question is yes.
Okay.
I believe that where the euro is headed to right now is that 0.618 level, right around 1.3123, somewhere in that range. And we'll see, what I'll be paying attention to here is also as it gets up on that 30-minute chart into the relative strength area. If it gets up above 69, right now the reading is 56. Once it gets up to 69, if I see a bearish reversal pattern, that's when I would say, if anybody who went long, I would say go ahead and cover that trade or put in a trailing stop, put in some type of adjustment into the trade. So the euro to me says that it wants to bounce higher. That's why I'm also long the ES Mini again on an intraday trade period. And so that's what the patterns look like to me.
Okay.
Are you looking for another short entry?
Yeah, I'm thinking about nailing in again back up there. I was waiting for it because it just keeps going right back. Like I said, it's the 3rd time it's done this morning. It went down. I walked away from my screen, came back. It was like a 130.39. Bam! She's right up there at 130.76. You're talking about volatility.
Yeah, I've been playing around with some with a number of moving averages. Tom, if you want to stay on the line, I'll show you something that I've starting to identify. I'm not using it yet as a trading platform, but it's kind of an interesting thing. So stick with us. We're going to go back, take a look at the euro with Tom. Right now, the Dow's off 35, Russell 2000, the weak link turned green again. It says the bounce. A bounce is on today. May not be the same bounce as Tuesday, but we will see a bounce. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 8 points right now. S&P almost flat here, trying to get green. And our man in Tom in Tampa, just down the street here, apparently during the break, he was out there backing up the truck, buying euros. Do you see that? Tom, are you the cause of that move in the euro?
Yeah, I think it's unbelievable, isn't it? I mean,
So the answer. So you answered your own question. Yeah, it's trying to crack that 1.3076 level.
Yeah.
How do you like that? So one of the things I've been just tinkering with now, this is not for getting into a trade, But I've been playing with a number of different moving averages, so I don't know that this is the formula here. But the moving averages, I've got four different. You'll see four different colored lines on my chart, folks, if you're looking at it. And those four lines are the so far right now. I'm using the 8-day. I know Basil Chapman, he won't like that, but I'm using the 8-day, the 21-day, the 50, and the 200. And in this case here, the green line that you're looking at on my chart, that's the 200. The blue line is the 50. The red line is the 21-day. And the black line, if you can make out that difference on my screen, that happens to be the 8-day. What I'm looking for is this little convergence where you get I'll call it a little rainbow effect, I suppose, where everything really comes together in a little tight bundle. What I'm noticing, if you were already in a trade, and in this case here, there were a number of reasons to have gotten in a trade here. One possibility would have been having on the euro back at about 5 p.m. on April 15th. You had this nice little bullish engulfing candle here coming from a oversold territory. The real entrance in on this trade here would have been right on either this candle here, if you were up at 8:30 in the evening. Most people are up, or on this candle right here at about an hour later at 9:30, 23:30, is it? No, that would have been 11:30. 23:30 is 11:30, right here on April the 15th. That was really your signal to have gotten into the trade. And then what I'm noticing, and then from a continuation move, from a real momentum standpoint, when you see this convergence here and these moving averages stay like this above each other, in this case here with this 8-day staying above, with the black above the red, above the blue, above the green, that was really a pretty strong indication of the trend that was underway out there. So, and also, I know that when something gets into a overbought or oversold condition, that you should be expecting a pullback here. Now, just simply using candlesticks here, even as the market got up here at the price point of 8:30 in the morning on the 16th, it never broke that body of the candle, so there was never a reason to close out the trade here. And from a lagging indicator standpoint, using these moving averages, still said, hey, stick with the trade out here, right up into this point, right here, where you had the 8-day cross back through the 21. That would have been one of your exit signals if you didn't take it up here, using some other system. So just simply something that I've been tinkering with for a while. I've back-tested it to see if you could use it as an actual trading entry and exit, and you can't. So you have to use it more from a momentum standpoint. So I throw that out there for you to take a look at and apply that to some charts and see if it means anything.
Yeah. But, yeah, I think it's a no-brainer she's going to head on up there, Steve.
Well, we'll see. We'll see. There is no no-brainer in these markets.
Yeah, that's true. That's true. Yeah.
Yeah. Actually, the no-brainer is just simply using stop. So, these markets, they have a mind of their own, and you just take the trades and you use stops, and you just simply go from there.
Yeah.
All right, my friend.
Okay. Thanks, Steve.
Hey, you bet. Thanks so much for calling. Hey, folks, stay tuned. Basil Chapman is up next. It is a terrific Thursday. That means that we've got our man Larry Pesavento. He'll be doing the Futures Hour. Daryl Martin after that. David White from 2 to 3. The Tom O'Brien Show from 4 to 6. Have just simply a terrific Thursday, folks. Look forward to seeing you in the morning. Take care.